One of the top stories is we're tracking the August PMI. That's what you call the manufacturing report. Of course, that came in late last week, just before the weekend. Yesterday was the first business day of the week, and folks may have tempted to just brush that aside. But of course, you have to sometimes use what you call some of this backward-looking data to help you gauge. So when you hear the month of August, that gives you an indication of what purchasing managers are thinking, what the data looks like from the manufacturers, the big, the mid-size, and the small. All of them come into the data, very broad basket by the Central Bank of Nigeria. That PMI reading was 50, I gotta get that right, 57.1 in the month of August. But a bit better than 56.8 in the month of July. That's the manufacturing, core manufacturing. Then the non-manufacturing PMI was slightly better, 58.0 against 57.7. Folks at Vetiva says this was good. It shows that the economy was moving at the fastest pace since January. We have a lot about that to discuss. Put it all together for the folks in the, thank you guys, in the commodities market. We have a lot to chew about. We have the second quarter foreign trade reports, which is expected from the Bureau of Statistics today. This is all part of the news for the consumers market. Take a ringside seat and listen to this conversation. Let's move to Temitope Olugbile. She's joining us from Vetiva, I beg your pardon, from Financial Derivatives Company. But she's live to us from our studios at the Nigerian Stock Exchange. Temitope, good morning. It's good to have you.
Good morning, Bosin. Thank you.
I like it when we have more good news than not so good news. So I like the PMI. We don't know what the Q2 foreign trade report will look like, but if our exports report in the PMI released by the central bank was anything to go by, that wasn't too good. So bring the headlines forward. Let's listen to you.
Okay, so the burning issues, like you said before, PMI is good news. It's back up to 54.8. That's FBN Quest PMI. And that's after being in the contraction region for 3 consecutive months. FAC is down by about 13% to about approximately 700 billion naira. Q2 foreign trade report, like you said, is scheduled to be released today, anytime from now. On-grid power is up. Brent is also good news. It's trading at about $78 per barrel.
Okay, so what else is making the headlines as far as your team at FDC is concerned?
Okay, so if you look at PMI, PMI is good news, like you said. It's reflective of increased inventory build-up, and that might be for 2 reasons. It might be because as we approach the festive season, manufacturers are increasing their inventory levels. It might also be as a hedge against any political uncertainties as we approach the political elections in 2019. So we have some indicators already sending triggers around. External reserves is down to about $45.8 billion. Naira is still relatively stable, but there are also triggers about the availability as we approach 2019. Stock market is not doing so good. In August, it lost 5.9%, the second highest loss in 2018. So that is a double-edged sword. It's good and also a scary indicator. Also, we have that FAC is down by 13% to about 700 billion. That's for August. Yes, it's bad because it will reduce consumer demand and it would reduce government investment. But the good news, however, is that the committee has set up another committee to reconcile the NNPC reporting remittances. So they are revising their reporting templates. And so that's good news for the consistency of FAC disbursement. So what we had in July, where there was like a long delay because of discrepancies of the NNPC remittances, that might be a thing of the past now. So that is good because FAC is not just about the number, it's about the consistency of it too.
Yes, I agree with you. But if you folks sit down to share 714 billion naira, I don't mind being in the room when that kind of money is being shared. So whether you like it or not, that's still a lot of money on the table, 36 states plus the FCT and the federal government and the local governments, of course. So this is September. So if you pump this money into the system, you and I know part of this, majority of this money, the bulk of it goes into consumption.
Definitely, definitely. So that's one of the things that is making analysts scared about what inflation for August and the other months of 2018, what it will be saying. So we're projecting, like we've been doing for a few months now, that inflation is definitely at an inflection point. So we have things like FAC, disbursement, we have election spending, 2018 budget implementation that would increase money supply and money in the market. So definitely inflation is the one that might bear the brunt of increased liquidity.
But again, if we have all this money coming, then we're looking at market prices, isn't it? If you look at consumer goods at the marketplace, what's your current survey? What does it say? What does it reveal in terms of where retail prices are heading?
Okay, yeah, so it's a scary thing for the average consumer about what consumer prices will be saying as we approach the end of 2018. But we must also remember that we are approaching the harvest season, so that might taper the effect of the increase in consumer prices. So our last survey, we saw that commodities such as semovita, rice, tomatoes, the prices decline, and we're also expecting commodities like yam, because we're approaching the new yam season anytime from October, so we're expecting that to also decline. And as more commodities enter their harvest season and there's increased supply of these commodities, it will definitely taper down the effect of the increased naira liquidity, but that might just be for month-on-month inflation and not headline inflation.
But again, one of the issues that, let me put it this way, should the consumers market, should industries be worried about the decline in headline forex reserves, including the unstable behavior of the price of crude oil, including our current level of production output?
Okay, yeah, so it's all encompassing, like you said. So our reserves are down to about $45.8 billion. And it's more because FPI, foreign portfolio investments, is a component of external reserves. So as we approach the election season, investors are taking, there's basically capital outflow coupled with the increase in US Fed interest rate. And so there's capital outflow, and that is, the effect of that is weighing down our external reserves. Even though oil prices are up slightly, it's pretty stable at about $78 per barrel. That is not enough to taper down the effect of capital outflows on our external reserves. So definitely that is a scary thing. And as we approach the end of 2018, naira might still remain stable or it might depreciate, but more importantly is the availability of dollar in the market.
Okay, now you're touching a very live wire there, Temitope. That's a very live wire. That's highly inflammable. And I agree with you. Again, we need to begin to watch this, and no one should be surprised with the way the media, everyone is reporting this, because yesterday, the first trading day of the current week, more than $420 million was the I&E window transaction. That's quite a lot. Look at last week, Monday to Friday, the final week in August, it was north of $900 million. Almost $1 billion went through the I&E window just last week alone. And we're starting this week with about $500 million already in just one day.
Yes, so all these indicators, again, are reacting to political uncertainty. So if we, away from the I&E window, if we look at stock markets, we've seen that it has been declining and it has been losing a lot. In August alone, it lost 5.9%. And stock market is dependent on confidence and earnings. So basically, investors are not so confident in our market. anymore as we approach 2019, which is with good reason. So all these indicators, we have external reserves, we have stock market, Naira stability, all of these headline inflation, which we are projecting will increase. All of these indicators are sending triggers to investors.
Well, Temitope, is it that they are not confident in the market, or they are worried about the political behavior of the political class and what they say and what they don't say and what they do not do?
Of course, they are worried about the political uncertainties. We are having things like direct primaries now shaking up political parties across Nigeria. And so they are worried about what this will mean as we approach 2019. And so, of course, and like I said, it's with good reason. So they'll be taking short positions in the equities market as we go forward.
Yeah, I agree with you. Finally, do you think there's anything in at the global agro products market that should be of concern? Weather conditions is impacting wheat, sugar, and a few other produce around the world. Should we be worried that if any of this is coming our way anytime soon? Not considering bearing, albeit our own flooding in a number of states as we speak.
Yeah, so more than weather conditions, there are also policy issues that are affecting some of our import and export commodities. So we see something like wheat, a commodity like wheat. Russia is thinking of putting restrictions on its exports, and so that would impact on supply, and we import wheat, so any upward movement of prices would affect our import bill. Cocoa that we export, we're expecting increased robust supply from Ivory Coast and Ghana, and so that would reduce supply. So things like this obviously would reflect on our import and export revenue.
That's nice. Thank you very much. We need to keep an eye on everything. And we thank you folks at Financial Derivatives Company keeping an eye on all of this together for us.